So friends, new chapter, that is chapter number 4, non-resident taxation. In this chapter, we have actually a few amendments and the other things that you should study for your examination. And this is again an important chapter for our final syllabus because definitely there will be one question in exam. Okay. So the first part of the chapter talks about what? Section 10, exempted income of non-residents. So please listen, friends. See, the speciality of this chapter is a kind of what do you say? It's an area where whatever provisions which are exclusively applicable to NR have been provided. So the only one thing that you have to be very careful in this chapter is there will be one question anyways in exam. The question will carry at least 5 to 6 marks. Every attempt there is actually one question from this particular chapter. Most probably it will be from the rate of taxes, computation of income of NR. That is what normally they test. They also have tested place of effective management as well. That we have already completed in chapter 2, residential status. So now the first part of the chapter is they talks about exempted income of non-residents. Again, I'm saying this is not that important for our exam, and there are lot of exemptions applicable for non-residents under different section. So this is basically section 10, all the list of exemptions that are exclusively applicable to NRs. Again, I'm not planning to cover this because again, not that important for our exam perspective. So what you need to do is, if you have time, if you get time, definitely go through it. But it's very difficult for you to, by heart all the sections and all the provisions. But again, I'm not saying that you should study this because they normally don't test this exempted area. It's again a plain general theory. But from here onwards, we should study thoroughly. So we are actually starting with the presumptive taxation for non-residents. This is the first topic that we are planning to cover. And from here, you should study everything in detail. So starting with the presumptive taxation for non-residents, friends, section 44B is our first topic. Special provision for computing the profits of shipping business of non-residents. So right now we are actually, this is the continuation of PGBP basically. If you check the section number, you will understand. Section 44B. 44AE was the last presumptive section that we have discussed in PGBP, and this is 44B. So this is actually continuation of PGBP, but it have been given as NR taxation. Why? Because these presumptive provisions are exclusively applicable for non-residents. That's it. So we are about to discuss presumptive taxation, which is provided under section 44B. And what is that? Special provision for computing the profits of shipping business of non-residents. If you are a non-resident in the business of what? Shipping. Then section 44B shall be applicable for you. So this section shall be applicable for all the non-residents who are in the shipping business except for other than cruise shipping in the case of non-residents. If you are a non-resident who is in the business of cruise shipping, have you heard about cruise shipping, where it is not passenger travel, it's just like a trip, a cruise trip. You can get a ticket just like Titanic. It's the best example for a cruise ship. So if you are a non-resident and if you are in the business of a cruise ship, then 44B is not applicable. Why? Because they have inserted a new section, that is section 44BBC. If you are in the business of operation of cruise ships, then there is a new presumptive provision they have inserted in the Income Tax Act, that is section 44BBC. That is why they are saying, if you are in the business of shipping other than cruise shipping in the case of non-resident. So if you are in the business of cruise shipping, then section 44B is not applicable. We are not talking about passenger shipping. Passenger means you take a ticket, they will drop you at a particular destination. Cruise is basically, it's a round trip. It's just like sightseeing, having food, enjoying some good time. The main purpose is not for any travel. The main purpose is to enjoy the time. So other than those in the business of cruise shipping, how do you compute the presumptive profits? Right now we are discussing what? Presumptive profits. Let's understand how to compute the presumptive profits. So what department says, amount paid. So friends, coming back to the point, the amount paid or payable to the assessee on account of carriage of passengers, livestock, mail, goods shipped at any port in India. That simply means if you are a non-resident shipping business and you are shipping passengers or livestock or mail or goods and you are shipping these items to any port in India, you are shipping something to India. Whatever income that you are getting will be definitely taxable in India. Along with that, amount received or deemed to be received in India for carriage of passengers, livestock, mail or goods shipped at outside India. You are shipping some products outside India, but for that you are receiving the payment in India. So basically, technically this is accrual. And this is first receipt. So whenever you are shipping any passenger, goods, mail, livestock, etc. to a port in India, then what we can say, that income, that the freight that you are getting for shipping any products to India shall be an income accrued in India. Likewise, if you are shipping any passengers, livestock, mail, goods, etc. to a port outside India, but you are receiving the payment in India, then we can call it as what? First receipt. So you take both of those freights, add it together, then apply presumptive income shall be 7.5% of such amount. You add these two. You add this one and the other one. Then on the total you apply what? 7.5%, and that 7.5% is the presumptive profit. Are you all with me? So department is making it very clear, if you are in the shipping business other than cruise shipping and you are a non-resident, then you must compute the profit in accordance with section 44B. How do you compute it? All the freight that you got for shipping any passengers, livestock, goods, mail, etc. to a port in India, and all the payment that you are getting in India for shipping any products, passengers, etc. to a port outside India, you take it together, then apply 7.5%, and that 7.5% profit shall be the presumptive profit in accordance with section 44B of income tax. And there are certain notes. Note number 1. Eligible assessee, eligible business being a non-resident engaged in the business of operation of ships other than cruise ships referred under section 44 BBC. Note number 2, the above total amount shall include demurrage charges. What do you mean by demurrage charges? What do you mean by demurrage charges? It simply means waiting charges. We normally give waiting charges for taxi. Likewise, if the mothership is coming to India and due to some reasons the mothership is not able to deliver the product, maybe they're not getting a customs entry, or maybe the port is not that big, or the port is too heavy or too busy. In such cases, the mothership will wait in the open sea. So for that you need to pay something extra, which is called as demurrages. The ship is collecting some demurrages, that means it is their income. That also have to be added as a part of the freight. Likewise, handling charges if they are collecting. What is handling charges? Say for example, if they are transporting live animals, then they have to give them food, clean the excrete, etc. So for that they will incur some expenses. For that they will charge some extra amount apart from freight. That extra amount also have to be considered as a part of the income taxable in India, or any other amount of similar nature that the ship has collected. Are you all here? So the point is simple. If you are a non-resident in the business of operation of ships, when you compute the presumptive profits, you need to add demurrages, handling charges and similar charges along with your freight to compute the presumptive profit. Are you all here? Then the total of all these you apply 7.5% to arrive at the presumptive profit. Note number 3. Assessee does not have an option to claim lower profit here. It's mandatory. What do you mean by it's mandatory? Say for example 100 rupees is your freight charges. Then how much is your income? 7.5 rupees should be your profit. Yes or no? You are saying that my profit is only 2 rupee. Can you show the original profit? No. You don't have an option to show original profit. You must compute your total income in accordance with the presumptive scheme. You don't have to maintain books of accounts. You don't have to compute the actual profit. We don't want to see that also. you must pay 7.5 rupees as what? Presumptive profit. We don't want to see your actual profit, or we are not giving you an option to show your actual profit. This is basically mandatory, not optional. Are you all here? Normal presumptive provisions are a kind of an option. 44 AD, it's not mandatory that a person should go for 44 AD or ADA or AE. Assessee always have an option. He can maintain books of accounts and carry out audit and show the actual profit. But here, no such option. You must show your, you must compute your profit in accordance with this provision. I hope it is clear. Now, that is not number 1, not number 2, and not number 3. So, moving on with the next point, friends. Listen, there is actually one thing that you have to be very careful. There is a thing called occasional shipping business. What do you mean by occasional shipping business? They are not frequent visitors. This year they came and they incurred some income. Next year they may or may not come. We don't know whether they will come in the next year or not. Those kinds of shipping businesses are normally called as what? Occasional shipping business. If you are in occasional shipping business, then you have to be a little bit careful with them. Why? Because once they comes to India and they does some activity, some taxable activity in India, like they are shipping some goods to India, then they are earning some income, then they will go out. We are telling them to file their return on the due date, and they will say, yes sir, we will file. Then they will go away, they will never file. They say tata bye bye, goodbye, that's it. They will never file their return, never pay the taxes. We cannot chase them and pull them and arrest them and bring them to India and all is not possible. That is only possible by Singham. Singham normally does all these things. If somebody comes to India, does a crime, Singham will wait for that person to leave India. In India, Singham will never arrest him. Once that person leaves India, Singham will follow, arrest him, and he will put it in jail. It is normally like that. I am a great fan of Surya, except for Singham. Okay, I love all his movies like J Beam and other movie. I just simply love all those movies. But Singham is a kind of alien movie for me. Okay, yeah. So apart from the jokes, coming back to the point. So it is practically very difficult for us to chase that particular assessee and pull him back to India or bring him back to India. It's kind of a impossible task. So what we can do is, what department say is, if you are in the business of occasional shipping, that means you are not frequently coming to India. You don't have a base in India. This year you came. Next year whether you come or not is an uncertain event. In such cases, you have to follow section 172. What? Section 172. That is profit of NR from occasional shipping business. We also call it as what? Accelerated assessment. Are you all listening? Let's understand what exactly is this accelerated assessment. So friends, listen. According to the normal provision, say you are not a occasional shipping business, okay? You are a frequent visitor. You have a base in India, but technically you are a non-resident. For you, computation of profit will be under section 44B. Thereafter, filing of return will be under section 139. Assessments will be under series 143. Are you with me? TDS will be under the respective TDS provision. Appeals will be under 246A series. So this is how normal income tax provisions are. But if you are if you are in the business of occasional shipping, then what department say? Don't refer any other provision. You only refer 172 because 172 is a complete code. What is complete code? It contains provision for filing return. It contains provision to compute your total income. It provides for the rate of taxes. It provides for the assessment. Everything is there. Occasional shipping businesses does not need to refer any other provisions of Income Tax Act. Everything is contained under section 172. Just like a supermarket where you can enter and buy all the products. You don't have to go to different shops. So occasional shipping business, 172 a kind of a supermarket. They don't have to refer any other provisions of Income Tax Act. Everything is provided under section 172 itself. Under section 172 itself. That's what we are about to discuss right now. So don't confuse 44B and 172. 44B is for a normal person. That only applies to compute your total income. It is just a presumptive provision only. That is required only to compute the PGBP profit for a normal NR who is in the business of shipping. But 172 is a complete code which is made and set up only for NR who is in occasional shipping business. So let's understand what exactly is this. Profit of NR from occasional shipping business, accelerated assessments. Let's understand what is this profit of NR. Starting with, the first thing what they are saying is, whenever you come to India, whenever a occasional shipping business comes to India, one thing they have to be very careful, before they leave that port in India, before they leave the Indian port after completing their services, it is the responsibility of the master of the ship to file the return and pay the taxes. Are you all with me? The responsibility to file the return and pay the taxes is casted on not the income owner. That is the shipping company's owner. It is not on the income owner. It is on the master of the ship. That means the captain of the ship. The captain have to make sure that before that ship left Indian port, they have to file, return and pay the taxes. So the master of the ship is liable for payment of taxes. That is the first thing. And he is responsible to file return of income in India as well before that ship leaves Indian port. For filing return and for paying taxes, you should compute the total income. Yes or no? As I've told you, 172 is a complete code. You don't have to refer any other provision. So the question is, how do we compute the income? Very simple. Presumptive income shall be 7.5% of the gross amount taxable in India. Whatever the gross amount taxable in India, you apply what? 7.5% as the presumptive profit. You apply how much? 7.5% as the presumptive profit. Whatever be the gross income taxable in India, apply 7.5% and that shall be your presumptive profit. That shall be your profit. On that profit, you need to pay the taxes. So another question will come. What is the rate of tax? Because you don't have to refer Finance Act as well. So what is the rate of tax? Very simple. The rate of tax applicable to foreign company, that is 35% plus surcharge plus cess. Irrespective of the legal form of assessee, all occasional shipping business always have to pay at a rate of 35 plus surcharge plus cess. Even if you are an individual, non-resident, occasional shipping, for a normal individual, the rate is slab rate. Yes or no? But if you are in the business of occasional shipping, you need to pay taxes at 35% plus surcharge plus cess. That means the rate applicable for a foreign company. This is not for a foreign company, rate is 35. It's not like that. For all assessees, the rate is similar to that of a foreign company and that rate is 35 plus surcharge plus cess. Moving on. So, even if you are an individual NR, your rate of tax shall be at 35% plus surcharge if any plus cess. And surcharge also similar to the surcharge slab of foreign companies. Now, three things are there. Number one, the responsibility to file, return and pay the taxes is casted on the master. Number two, the presumptive income shall be 7.5% of the total income of the assessee. Number three, rate of tax shall be the rate similar to that is applicable for a foreign company, that is 35 plus surcharge plus cess. Now let's understand each and every note one by one. What is note number one? The master has the obligation to file return and pay the taxes. That I've already told you. It is a responsibility of the master to file the return and pay the taxes. The return of income should be furnished before the departure of the ship from that port in India. Before you say Tata bye-bye from Indian port, the master of the ship has to make sure that the return have been furnished. Are you all with me? Hope you remember we have covered this in basic concepts. Normally, an assessee is required to file his return in the due date of which is between the AY. But 172, if you are an occasional shipping business, that too a non-resident, you need to file your return before you leave Indian port. So hence we can say it is a responsibility of the master of the ship. That too before he leaves Indian port, he must file his return and pay the taxes. Moving on, note number two. What is that? If AO is satisfied that it is not possible for the master of the ship to file return before departure of the ship. Imagine a case where master have given a request to the AO stating that I must leave India urgently. There is some urgent matter, so I must leave India urgently. I don't have time to wait here to compute my total income and pay the taxes and file my return. I don't have time. I must leave India as early as possible due to some emergency. And master have done one more thing. Master have appointed an agent here in India, an authorized representative, for paying the taxes and filing the return. And master have submitted an adequate bank guarantee also for the payment of taxes. If all these things are satisfied, then assessing officer will say, okay, you can leave, no problem. Anyways, you have appointed an authorized agent and you have done all the satisfactory arrangements to pay the taxes and filing the return. No problem. If this is the case, you can leave India. Are you with me? That is what we are about to discuss. If AO is satisfied that it is not possible for the master of the ship to file return before the departure of the ship from the port, and the master has made satisfactory arrangements for filing return and payment of taxes. Normally, satisfactory arrangement means appointing an agent and submitting a bank guarantee. That is a satisfactory arrangements. Then such authorized person should file the return within 30 days of departure of the ship. Then such authorized person, that means you are appointed an agent here, that authorized person should file the return within 30 days from the date of departure of the ship. Within 30 days, you must submit the return and pay the taxes. Are you with me? Are you all here? So the point is very simple. If AO is satisfied that master have done all the satisfactory arrangements in relation to filing return as well as paying taxes, then AO may allow master to leave India even without filing the return. But in such cases, the authorized agent have to make sure that he is filing the return within 30 days from the date of departure of the ship. This is what they are saying under 172. I hope that also is clear for you. Moving on. Moving on to the next point, note number 3. AO on receipt of return pass the order of assessment within 9 months from the end of the financial year in which return is filed. Once you file the return, assessing officer will complete the assessment also under section 172. The assessment also happens under section 172. You don't have to refer any other provision. But assessing officer have to complete the assessment within how many months? 9 months from the end of the financial year in which you submit your return. Say for example, your return submission date is, say, we'll put a date. Say your return submission date is on 15th December 2024. Is the date of filing return. Say this is the date of filing return. You tell me which is the financial year. In which financial year your return has been uploaded? In which financial year your return is uploaded? 24-25 is the financial year in which you have filed the return. End of this financial year means when? 31st March 2025 is the end of financial year. From that end, 9 months. 9 months means 31st December 2025 shall be the maximum date. Within this date, AO must complete the assessment and issue the order of assessment. Basically, the assessment will get over before this time itself because there is nothing much to assess. The only one thing that they have to make sure that the assessee is earning only that much of income, that too occasional. So they don't have that much frequency. The quantum may be high, but the frequency will be less, 1 or 2 events. You need to ascertain whether the amount taxable in India is right or not. Then everything rest is very simple. Apply 7.5%. There is no point of any expenses. Apply 7.5%. Then you compute the rate for that 35% plus surcharge plus cess. So this is the maximum time that they are talking in IT Act. That's it. Are you all here? Super. So moving on, friends, what is next? So AO on receipt of the return pass the order of assessment within 9 months from the end of the financial year in which return is file. That's what the department says. Moving on to note number 4. Let's understand what is note number 4. The port clearance shall not be granted to the ship until the collector of customs is satisfied that the tax accessible under section 172 has been duly paid or satisfactory arrangements has been made for the payment. What does that mean? See, once you are in India and you want to go out of India, you should get customs clearance. If you want to get customs clearance, then you should submit an NOC from IT department. If you want to get an NOC from IT department, you must file your return, pay the taxes, or you must make satisfactory arrangement and the AO should allow you to go out of India even without filing the return, but you have appointed an agent and done all the satisfactory arrangements. So this is what the department say. So if you want to get a customs clearance to go out of India, you have to comply with the provisions of IT Act. Note number 5. Next thing. Imagine, say, I am a non-resident individual. I am a sole proprietor running the business of shipping. This is the first time I visited India. This is the first time that I visited India. I visited India for the first time, say this year. Are you all here? Say this is my first year of visiting India. So I will definitely say to the assessing officer that, sir, please don't assess me under 172. Because if you assess me under 172, my rate of tax will be at 35%. Plus surcharge plus. Every year I am planning to come to India. Every year I am planning to come to India. Please assess me under the normal provisions. You apply 44B, presumptive income. Then I will pay taxes according to the slab rate and normal surcharge rate. So please assess me as per the normal provision. Please allow me to file the return as per 139 subsection 1. Okay. So assessing officer, if he say yes, then this tricky guy may go away and he may not come back in future. So assessing officer cannot blindly say, okay, Baba, you file the return as per the normal provision. Normally, assessing officer cannot say like that. So what he will do is, he will say to the assessee that you do one thing. You are saying that every year you will come. You do one thing, you file the return according to 172. Pay the taxes according to 172 at 35 plus surcharge plus cess. Then you go. At the time of due date of filing your normal return, you file one more return. In that return, you show your income under 44B and pay the taxes as per the slab rate. The tax that you have paid right now will be treated as an advance tax that you have paid. And at that time of due date of filing your normal return, whatever refund is there, it will give you the refund. So that it's a win-win. Win for a department, win for assessing. Why win for department? Even if you don't file that return under 139 subsection 1, no, nothing to lose because you have already paid the maximum amount that a person is supposed to pay. So it's a win for the assessee also. Why? Because assessee should not feel like taxing at 35% is a hardship. Don't worry, you file return according to 139 subsection 1. When the due date comes in, then you take the refund. So it is a win-win situation for both the department as well as for the assessee. So let's understand what exactly is that note. Owner may claim for the assessment of income under normal course of the act before expiry of AY relevant to the PY, in which the date of departure of the ship falls. If it does so, any payment made under 172 is to be treated as a payment in advance of the tax liable. Note number 6, refund may arise in the case of a non-corporate non-resident since they are liable to pay tax at a lower rate than the rate of not 40, 35. Rate of 35% plus surcharge if any and set that 4% applicable to a foreign company. So this is a kind of beneficial to the assessee. Why? Because the under 172 your rate of tax will be at 35% plus surcharge plus cess. If you are applying the normal provision, then you can pay the taxes as per the normal provisions. So here, whatever the excess tax that you have paid shall be allowed as a refund. There is nothing to worry. Are you all here? And moving on to the last note, note number 7. The non-resident assessee is liable to pay interest under 234B and 234C, also entitled to receive interest under 244A. That means if there is any pending liability, there won't be any pending liability when you file your return in accordance with 139 subsection 1. But in some case, say there is some pending liability, then there is no advance tax liability. You haven't paid any advance tax, then all the 234B and 234Cs will be applicable for you. And likewise, 244A, that is interest on refund. If there is a delay in getting the refund, you are eligible for interest under section 244A, that is 0.5 percentage per month or part thereof. Are you all with me? Have you understood the concept? So you are eligible for all the interest. You are liable to pay the interest as well. That's what the department say. 172 is not absolving you from payment of interest. You are eligible to pay interest and you are liable to pay interest as well. Eligible to get interest and you are liable to pay interest as well. That is the point under section 172. I hope this much is clear for you. So friends, two sections, 44B and 172. 44B is only a presumptive provision which is applicable to all non-residents who are not occasional. And 172 is a complete code which is applicable to all non-residents. And these provisions are not applicable to whom? Who are in the business of cruise ships. Or if you are in the business of cruise ship, these provisions are not applicable because you have a separate provision for that. Are you with me? Are you all here? So this is what the department say, and let's straight away start with a question. So friends, let's solve a question. So this is question sheet part 2. Question sheet part 2, page number 9, question number 1. So it is basically part 2. Page number 9, question number 1. Easy question. Quickly read the question and give me the answer. Okay. It's such an easy question. So quickly read the question and give me the answer. So friends, coming back to the question, Seaport Shipping Line, a ship non-resident foreign company, ship is engaged in the business of carriage of goods shipped at Port Mumbai. So they are shipping something to a port which is in Mumbai. Then during the previous year ended 31st March 2025, it had collected a freight of 100 lakhs. Alright, so they have collected a freight of 100 lakhs. So we'll write freight. How much is the freight? They are saying 100 lakhs. Then what are the other things that they are saying in the question? Listen, then they collected demurrages. How much is the demurrages that they have collected? 20 lakhs. I'll write D, demurrages, 20 lakh. Then handling charges, HC. How much is that? 10 lakhs. So altogether they have collected 130 lakhs from that particular client, whatever it is. Now the expenses of operating this fleet is around 110 lakhs. The expenses you have to ignore. Why? Because you cannot show actual expenses and you cannot show actual profit. 44B is actually mandatory. And compute its income applying the presumptive provisions under section 44B. Very simple. How much is the presumptive provision? Presumptive profit shall be 7.5 percentage on 130 lakhs. That will be how much? 9,75,000 will be the presumptive profit. This is not the amount that they have to pay as taxes. This is the presumptive profit. On this they have to apply the rate of tax. So this is how you have to answer the question. I hope it is clear for you. Are you all here? It's simple only. There is nothing more that you're required to do. There is nothing more. So I hope it is clear. So we have completed two sections, 44B and 172. Now we will move on to that new amendment, that is section 44BBC. So let's understand what exactly is the new one. Section 44BBC, that is special provision for computing profits and gains of business for operation of cruise ship in the case of non-residents. See, the main purpose of introducing this provision, this presumptive provision, is what? For a normal person, especially if it is a passenger ship or a goods ship, etc., their profit margin will be less. Normally, their profit margin will be comparatively less. But for a cruise ship, they will charge a premium amount from their customers for the cruise. Yes or no? So that their profit also will be high. So normally, before introduction of this section, the cruise ship used to claim that 44B and they only say that you only 7.5% of profit we have. Are you with me? Then the department said no. Cruise ship, we know that you have more profits. So for you, your presumptive income shall be 20% of the amount. That's it. That's why they are saying cruise ships are not supposed to take 44B anymore. For you, we have a separate section that is 44BBC. So let's understand what is 44BBC. Amounts paid or payable to the assessee on account of carriage of passengers. If you are a cruise ship and you are carrying passengers, in cruise ship nobody will carry goods. Maybe they will take the luggage of passengers. That is another item. So all the amounts that you have paid or payable for, what do you say, carriage of passengers, plus amount received or deemed to be received for a carriage of passengers. Either amount received in India or you are carrying passengers, then you take the total of these two, apply 20% of such amount. You apply what? 20% of such amount, and the 20% shall be your presumptive profit. Are you all with me? Compared to 44B, the main difference here is what? There it is 7.5% profits. Here it is 20% shall be the presumptive profit. Note number 1. Eligible assessee being a non-resident engaged in the business of operation of cruise ships subject to prescribed conditions. So you have to be a non-resident and you are in the business of operating cruise ships. Then, note number 2, the lease rental paid by a foreign company which opts for presumptive scheme under 44 BBC would be exempted in the hands of the recipient company under section 10(15)(b) if such company is a foreign company and both these foreign companies are subsidiaries of the same holding company. This exemption would be available up to assessment year 30-31. This is a part of the exemption. So we'll go back to the exemption and let's understand what exactly is this exemption. Why? Because it's a new amendment. So it is always better to study all the new amendments. So 10(15)(b), let's go back to 10(15)(b) and let's understand what exactly is 10(15)(b) in the list of exemptions. Say for example, section 10(15)(b) is an exemption and the assessee should be what? A foreign company. Listen. Income by way of lease rentals from cruise ships received from specified company which operates such ships in India, provided such foreign company and the specified company should be subsidiaries of same foreign company, and such income should be accrued in India for any assessment year on or before 1st April 2030. So listen, based on this exemption, we will create a chart to make you understand what exactly is that particular exemption. Say for example, there is a French company, FRA1. This is actually a company from France. Are you with me? This company owns some cruise ships. This company owns some what? Cruise ships. And this company have a subsidiary company that is SUB1. It's a subsidiary company. That's why I've given it as SUB, means subsidiary. So if this foreign company have a subsidiary company, or we can say like this, say not a subsidiary company of this foreign company, we will say another company. We will write specified company, okay? Rather than saying specified company, we'll use specified company. This specified company is taking this ships on lease. Ships on lease. So this is another company, not subsidiary company of foreign. This is another company, specified company. They're taking ships on lease from the foreign company. Now, if they're taking ships on lease, then the specified company should pay what? Lease rental. Lease rentals to foreign company. They are paying what? Lease rentals to foreign company. This lease rental is exempted. This lease rental is exempted from income tax under section 10(15)(b) in the hands of this foreign company. That's what they are saying, provided there is one condition. What is that condition? Both of these companies should be a subsidiary of another foreign company. There is another foreign company, this FRA1, and the specified companies should be what? Subsidiaries of another foreign company. Simply means, say I am a foreign company, I have two subsidiaries. One subsidiary owns a ship, other subsidiary is conducting a cruise activity in India. The company which owns that particular ship gives that ship on lease to the company which is about to conduct that voyage, and they are getting some lease rental. For this lease rental, this FRA1 is not supposed to pay any taxes in India, and this exemption is there up to 1st April 2030. This exemption expires on 1st April 2030. This will be applicable till 2030. Now, so here the specified company means a company other than a domestic company which operates ships in India and opts to pay taxes under 115 BBC. So this specified company should be a company other than domestic company, which operates cruise ships in India. Which operates what? Cruise liners in India. So the specified company also have to be a foreign company which operates what? Cruise ships in India. So it is just like one foreign company have two subsidiary foreign companies. One foreign company owns the ship and the other foreign company wants to conduct a cruise activity in India. They took it on lease and it's like an internal payment happening. So we have no plans to tax it up to assessment year or up to the date of 1st April 2030. Thereafter we may, that we don't know, let that date comes in. Thereafter they may introduce something else if there is income tax act at that time. Okay, yes. So coming back to the point, this is what they are saying. Income by way of lease rental from cruise ships received from specified company which operates such ships in India. Coming back to 44 BBC, what they are saying here is note number 2. Lease rental paid by a foreign company which opts for presumptive scheme under 44 BBC would be exempted in the hands of recipient company under 1015B if such company is a foreign company and both these foreign companies are subsidiaries of the same holding company. This exemption would be available up to AY 3031. That's what I said. Up to 1st April 2030, this will be applicable. Note number 3. Assessee does not have an option to claim lower profit here. It's also mandatory. Can you maintain actual books of accounts and say that my profit is less than 20%? No. If you are in the business of this cruise ship, you must pay minimum, you must show minimum 20% as your profits. One thing is there, this provision is only applicable for foreign companies in the doing the business of cruise liners. If you are a domestic company and you are doing this cruise ship, maintain books of accounts, carry out the all other legal forms in India. For you, 44 BBC is not applicable. We are only talking about foreign shipping company which does this cruise shipping business in India. Are you with me? Good. Moving on with the next presumptive provision, friends. So we have completed 3 presumptive provisions. Number 1, 44B, 172 and 44 BBC. Now we are moving on to the next presumptive provision, that is section 44BB, that is special provision for computing profits and gains in connection with the business of exploration etc. of mineral oil. Say for example, if you are in the business of exploration of mineral oil, then you must you must compute your total income in accordance with section 44BB of Income Tax Act. Let's understand what exactly is this point. Say a non-resident engaged in the business of exploitation of mineral oil or supplying plant and machinery on hire to be used in exploitation of mineral oil. Say for example, either you are a non-resident, you are directly engaging in exploration of mineral oil, extraction of mineral oil, or you are supplying plant and machinery on hire, just like the rigs and other things, you are giving plant and machinery on hire to be used in exploration of mineral oil. Somebody else is using that particular plant and machinery for exploring mineral oil. So you can be 2 incomes. Number 1, exploration of mineral oil, direct income. Number 2, lease charges for renting out the plant and machinery to be used in exploration of mineral oil. So for both of these incomes, what you need to do, total these incomes, then apply 10% of the gross receipts from such business as a taxable income in India. So the presumptive rate of tax shall be how much, friends? 10%. That's what the department says. But here you have a wonderful option. Why? Because here assessee have an option to claim lower profit provided they maintain books of accounts in accordance with section 44AA and carry out tax audit in accordance with section 44AB. If you maintain books of accounts and carry out tax audit, don't worry, you can show a lower profit. Are you with me? So either without books of accounts and tax audit, you show how much? 10% of the gross amount as the presumptive profit, or by maintaining books and carry out a tax audit, you prove that your actual profit is less than 10%. Are you all here? Now, gross receipts from such business shall be paid or payable to such person in or out of India on account of provision of services in India, and received or deemed to be received in India on account of such service outside India. Either your exploration is happening in India so that you are getting an income, or you are doing somewhere else but you are getting the payment in India. Either one is accrual and the other one is first receipt. You add both, then apply 10% as a presumptive profit. Now, note number 1. If the income of a non-resident is in the nature of FTS, what is FTS? Fees for technical services. Fees for technical services, it shall be taxable under section 44DA or 115A, irrespective of business to which it relates. If that income that you are getting, if it is in the nature of a technical service, then this provision is not applicable. It will be covered under 44DA or 115A. Both 44DA and 115A we will study in this chapter itself. Are you with me? If this income is in the nature of fees for technical service, then this 44BB is not applicable for you. Then you need to compute the total income as per 44DA or 115A, as the case may be. We will study both the sections later. Then, note number 2, 44BB would apply in the case where consideration is for services or other facilities relating to exploration activity which are not in the nature of FTS. It's again a repetition. The consideration should be in any nature other than FTS. Then, note number 3, from income under this section, no set off of unabsorbed depreciation or broad profit loss would be allowed to the assessee. From this income, you cannot adjust any unabsorbed depreciation as well as broad profit loss. Say last year, you had some unabsorbed depreciation. Last year, you maintain books of accounts, carry out tax audit. Say you have some unabsorbed depreciation or broad profit loss from last year. This year, you opted for 44BB. Can you adjust that unabsorbed depreciation as well as broad profit loss from last year with the presumptive profit this year? No, not possible. Not possible. That's what the department said. From income under this section, no set off of unabsorbed depreciation or broad profit loss would be allowed to the assessee. It's not permissible. I hope it is clear. Never tested an exam, but still, let's not skip that because it is an easy one, small one. Are you all with me? So section is 44BB, special provision for computing profits and gains in connection with business of exploration of mineral oil, or you are renting out plant and machinery to be used in exploration of mineral oil. That's it. Moving on with the next presumptive provision, that is section 44BBA, another easy one. 44BBA, that is special provision for computing profits and gains of business or operation of aircraft in case of a non-resident. Say you are a non-resident, you are in the business of operating aircraft. What is operating aircraft? Say for example, Japan Airlines, then Singapore Airlines, Qatar Airways, Fly Emirates, British Airways. You are in the business of operating aircraft, airline businesses, and you are non-residents. Then 44BBA will come into the picture. Let's understand what exactly is 44BBA. So what department say? Amount payable to the assessee on account of carriage of passengers, livestock, mail or goods from any place in India. You are taking passengers, goods, etc. from any place in India. You are not dropping them to India. You are taking them from India. Are you with me? For that you are getting a income plus amount received or deemed to be received in India on account of carriage of passengers, livestock, mail or goods from outside India. You are taking them from outside India, but you are receiving the payment in India. Both income have to be added. The first one is on account of accrual. The second one is on account of first receipt. The first one is accrual. That means amount payable to the assessee on account of carriage of passengers, livestock, mail, goods from any port placed in India and placed in India. Okay, you are taking someone from any place in India. Second one, you are taking them outside India, but you are receiving the payment in India. You add these two and apply how much? 5%. The presumptive profit shall be only 5% on the aggregate amount. So normally what happens is this aircraft business is actually very expensive and their profit margins are also less. So they are saying only 5% presumptive profit. Are you with me? So coming back to the point, friends. So aircraft business, and there is a note, assessee does not have an option to claim lower profit here. It's mandatory. If you are saying that your actual profit is less than 5%, don't come to India. You be there. Okay, minimum you must show 5% of your gross amount as your total profit. We are not giving you an option to show lower profit over here. Are you all with me? So these are the things under 44 BBA. Another easy section, small section, short section and important section as well. So let's solve a problem again in relation to 44 BBA as well. So can you read question number 2 and give me the answer? Just go through question number 2 and give me the answer. Question number 2, let's read Q2 and finish off that as well. So listen, what are they saying? Mr. Q, a non-resident, operates a aircraft between Singapore and Chennai and he received the following amounts while carrying on the business of operation of aircraft for the year ended 31st March 2025. So the first amount is 2 crore that received in 2 crores in India on account of carriage of passengers from Chennai. Received in India from Chennai. Anyways taxable. 2 crore. Second one, 1 crore in India he received on account of carriage of goods from Chennai. That also was taxable in India. Third one, 3 crore in India on account of carriage of passengers from Singapore. Even though the carriage of passengers is from Singapore, you have received the payment in India. It's alternative, not cumulative. Either receipt in India or carriage of passengers from India. So that 3 crore also will be taxable in India. And item number 4, 1 crore in Singapore on account of carriage of passengers from Chennai. So you took them from Chennai. That also will be definitely taxable. So that is 1 crore. And can you tell me how much is the total? It will be 7 crore. And total expenditure incurred by Mr. Q for purpose of business during the year, that is 31st March 2025, was 6.75 crores expenses. What to do with the expenses? Ignore. Because you don't have an option to show lower profit over here. So why should you keep all the expenses? We can simply ignore it. 44 BBA is basically what? Mandatory. We don't have an option to show lower profit over here. So you tell me how much is the presumptive profit at 5% of this amount means 35 lakhs, right? 35 lakhs will be the presumptive profits. Now, compute the income of Mr. Q chargeable to tax in India under the head PGBP, that is 35 lakhs for assessment year 25-26. And they are also asking us to compute, what would be your answer in case the business was carried on by a foreign company, Q Airlines Private Limited. If it was a foreign company instead of a non-resident sole proprietor, what will be the difference in the answer? No change. Whether it is foreign company or individual non-resident, your presumptive profit shall be 35 lakhs only. But while computing the taxes, in the case of a non-resident individual, it is slab rates. In the case of a foreign company, it will be 35 plus surcharge plus cess. But in this question, they are not asking us to compute the tax liability. Hence, we can say that there is no change in the total income. Presumptive profit computation is same for NR as well as foreign companies. And hence, we can say there is no change in the answer. So, depends upon the question, our answer varies. If the question is asking us to compute the tax liability, then there would have been a different answer. Are you all here? All right. Moving on. So, that is question number 2. I hope it is clear for you. So moving on with the next provision, friends, easy one, section 44 BBB, that is special provision for computing profits and gains of a foreign company. So listen, 44 BBB is only applicable for whom? It is not applicable for all non-residents. It is only applicable for foreign companies. Foreign company engaged in the business of civil construction, etc. in certain turnkey power projects. Do you know what is turnkey power projects? Say for example, say if you are an assessee, that is a foreign company engaged in the business of civil construction or business of erection of plant and machinery or testing or commissioning thereof in connection with a turnkey power project approved by central government. The best example for this is, say there is actually a turnkey power project happened in Kerala. Okay, it's an Indo-Canadian model. Say, I'll give you an example for this. Say for example, a foreign company is coming to India. A foreign company is coming to India. They are setting up a power plant in India. They are setting up what? A power plant. Either it will be a hydroelectric power plant, or it is a nuclear power plant, or it is a thermal power plant. They set up everything. After setting up everything, they are handing over this power plant to the state government. They are handing over this power plant to what? State government by accepting a lump sum consideration. This foreign company is doing what? Setting up everything, make it running and handing over it to the corresponding state government or central government, and they are getting a lump sum amount. The state government and central government need not take any headache for the construction, setting up, etc. They can simply administer it. Just like a person buying a car, turning on the key and driving it. The person don't want to know how the engine works, how the brake works, how diesel is converted into power. Do we have to know everything? No. The only one thing that we want to know, if you turn on, whether it is getting started. When you switch on the accelerator, whether the car is moving. When you switch on the brake, whether it is stopping. That's it. You only have to know the driving. It is something like that, turnkey. You don't have to know about the construction and its other thing. You only should take care of its administration. Are you all with me? So let's come back to the point. Here the eligible assessee is an assessee who is a foreign company who is engaged in the business of civil construction or business of erection of plant and machinery or testing or commissioning thereof. Either you are constructing that entire project or you are setting up plant and machinery and testing or its commissioning, etc., which is in connection with a turnkey power project approved by the central government. It should be a turnkey power project approved by the CG, central government. Are you with me? Coming back to the point, friends. So in connection with the turnkey power project set up by the central government. Now the question is, how much is the presumptive profit? Very simple. Income of such business shall be estimated at 10% of the amount paid or payable, whether in or out of India, to the assessee. That simply means whatever income that you are getting from this activity, you take that entire income, apply 10%. You apply 10%, that 10% shall be your presumptive profit. And here, don't worry, we are giving you an option to show lower profit. If you are saying that your profit is lesser than the presumptive scheme, then don't worry, you maintain books of accounts and carry out tax audit and claim lower profit, no problem. And note number 3, from income under this section, no set off of unabsorbed depreciation and brought forward loss would be allowed to the assessee. From this presumptive profit, again, don't come and ask for any adjustment of unabsorbed depreciation or adjustment of any brought forward loss. Not permissible. Minimum 10% you should show. Are you with me? So this is what they are saying under 44 triple B. Very simple. You have to be a foreign company and your business should be what? Setting up civil construction, or you are setting up plant and machinery, it's testing, commissioning, etc., which are connected with a turnkey power project which is approved by the central government. If you are in that activity, then what government says is like, out of your entire total income, only show 10% as your presumptive profit. Are you all with me? Now let's compare all the provisions that we have learned till now. 44B was connected to shipping business and applicable to all NR. Your presumptive income is only 7.5% of the sum. You are not supposed to show a lower profit over there. Then 44BBA, operation of aircraft, applicable for all non-residents. 5% of the sum is the presumptive profit. Again, lower profit not possible. 44BBC, operation of cruise ships, applicable to all NRs. 20% shall be the presumptive profit. Again, you don't have an option to claim lower profit. 44BB, that is providing services in connected with exploration of mineral oil, or you are directly exploring the mineral oil, applicable to all NR. 10% shall be the presumptive profit. There you can maintain books of accounts and carry out a tax audit so that you can show a lower profit over there. Similarly, 44 triple B, that is civil construction, etc. of a turnkey power project. It is applicable only for foreign companies. Your presumptive profit shall be 10% of the entire sum that you have got, and there also you can show a lower profit by maintaining books of accounts and carrying out tax audit. Is that point clear? By that we can say that all the presumptive provisions of non-residents are over. The first set is actually over. These are presumptive provisions. I hope this much is clear for you.